Welcome to the show. I hope you had your Wheaties this morning because making sense of it all is a tough task, and we're looking to you to help us do it. Let's begin with some of the disappointing manufacturing PMI data out of Europe. Germany to levels they haven't seen since 2013. Their manufacturing PMI came in below 50, and then overnight their business climate index and business expectations declined as well. Does this concern you?
It does, and I think it certainly concerns Mario Draghi. If you listen to his comments, he backed way far away from raising rates. We've gone from a 70% chance that the ECB was actually going to start tightening monetary policy back in September, October, to essentially zero today. So again, as we've talked about for the last year or two, we'll believe Mario Draghi or the ECB when they actually start to do something as opposed to just talk about it. So we do see that weakness in Europe. It is, I think, a direct impact on what we're seeing in China. The weakness in China, I think, is spilling over into Europe. And it's having a little bit of an impact here in the United States, but not nearly that much. But there's a fair amount of trade that goes back and forth between Europe and China. So I think you're seeing that impact there.
Yeah, I mean, Paul, I imagine as U.S.-China trade talks continue to linger and weigh on Euro economic conditions, I mean, ultimately, we don't really have an end in sight. So, I mean, are we expecting just more of this to continue, the trend that we've been seeing continue to play out here?
I think so. The sad part is that we're going to have the Chinese group here next week.
Right.
And unfortunately, on the business pages, that's buried on page 10. So, trade is certainly not front and center, or certainly doesn't seem to be at this point. There's so much other stuff going on. That is, I think, one of the most important things that we have from a global perspective, and I think that's really tossing a wet blanket on global growth. We're seeing a lot of slowdown in a lot of different countries, a lot of different areas. Sentiment numbers have come down. The PMIs have come down globally. So I think we're in that period now where we were talking about synchronized growth. We may be talking about synchronized slowdown and or contraction in some areas.
Yeah, we did see some contractions in some of those Euro countries yesterday in terms of those PMIs. Below 50 they came in. I also saw a headline this morning that stated that due to Brexit concerns and uncertainties related to the EU-UK divorce package, Germany has cut its economic growth forecast for 2019 to 1.0% from 1.8%. I mean, does this mean further weakness for the 6E? I'd assume so. I mean, this kind of just falls in line with what we've been talking about, Paul.
Oh, absolutely, and you are seeing it in the euro. The euro is kind of bouncing around at their lows, their multi-year lows. We thought they were going to be reversing here, but not so much. So you're seeing it play out in the currency markets, but it is, and Germany is the biggest beneficiary of the euro. So as Germany goes, so goes the euro, and so it's certainly an economy to keep a close eye on. And things are not looking good there, and we've got another election with Merkel, I think, next year. So she's going to be under some duress over the next 12 months or so.
So, Paul, you commented on Mario Draghi and how he is a bit concerned related to some of the numbers that we discussed here. Yesterday, we heard from Draghi, the head of the ECB. They left their monetary policy unchanged as expected, but Draghi's downbeat comments seem to add to speculation that it could be a while before we see a rate hike, and it seemed to also raise the possibility that it could actually be a cut before we see a hike.
Yeah, there's not much left to cut in the Eurozone. We're still seeing some negative rates in some of the shorter-term instruments in various countries. Germany certainly has negative rates in the front end of the curve. So again, it goes to the fact that they're struggling to get things going, just as they are in the United States. I mean, If you take a look at what we've done with zero interest rates or the various quantitative easing methods that we've had for the last 10 years, growth has only picked up in the last year or two, and we're already seeing that come off dramatically here too. So I don't think zero interest rates, negative interest rates is the panacea for economic growth. You have to have policy more aligned with the economy and trying to get things going. And monetary policy is only one small tool in the toolbox.
Yeah, and it sure seems like policy isn't necessarily in line with the economy. I just pulled up a look at the Swiss franc. You mentioned it's not just the euro currency. Swiss franc's been a bit under pressure recently as well. And I also pulled up a look at the British pound. While it is off lows, also, if you take a look at it, for the most part, not out of the woods yet. Let's talk a little bit about the Brexit latest. I saw Parliament will vote on Prime Minister Theresa May's Brexit Plan B on January 29th. What does Plan B involve, and will it find more support than her Plan A, Paul?
Yeah, I'm not sure. We may wind up with Plan D or E before we're done. And that's really one of the things that we're starting to hear more about now, is that this is going to get kicked down the road just in the way most every other big program has been done. They may postpone Brexit because they may not be able to come to some consensus. There's some real hard lines in the British Parliament that may prevent May from getting what she's looking for between the British government and the European Union. So if they do wind up pushing that out, and there's even some rumors running around that they may redo the vote of Brexit now that everybody kind of understands what's all implied and how this works and some of the hardships that are occurring. You're seeing some of the businesses leave London right now and move to other parts. It's going to be a big hurt on England over time. But you're right, in the short term, at least, the pound has bounced, and I think it's bounced because you're starting to see some talk that maybe we won't get to Brexit. That eventuality will get pushed off to some future date.
Yeah, keep in mind, though, that bounce still somewhat limited relative to the bigger picture and some of the selling they saw initially in reaction to that referendum. I got one more question for you, Paul. I'm curious in terms of the U.S. shutdown now entering day 34, day 35. I've lost count at this point. How much of it is impacting financial markets? And second part to the question, do you think next week's Fed comments will actually recognize the government shutdown as potentially something for us to be watching as far as growth and economic concerns?
Yeah, from an economic perspective, we're now hearing sub-1 GDP growth for the first quarter. Wow. It lingers longer. We could get to zero. Some of that will snap back. It's kind of like a storm blowing through, Florida or something like that, where initially you see growth slow down, but snap back as everything recovers. But there's a lot that has been permanently lost. And I think you will hear some comments from the Fed. You are seeing sentiment numbers roll over. You're seeing PMIs here in the U.S. slow down. They're still in expansionary, but they're certainly a lot slower than they have been. So we are seeing slower economic growth. And I think, too, the Fed has already warned us that they're going to take the data as it comes. Yeah. And the financial markets have translated that into no more rate hikes this year.
Yeah, and for the most part, as the financial data, as it's been coming, it hasn't been coming that great, that's for sure. Saw kind of mixed activity this week. Paul, really appreciate you joining us this Friday morning, and we look forward to seeing you back here in the near future. Traders, that's Paul Nolte. He's the Senior Vice President and Portfolio Manager of Kingsview Asset Management, joining us.